Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news the US Fed is covering Wall Street's risks again. But first, in China, new data for retail sales bolstered by rising factory production are generally positive and suggest China is in fact recovering from its coronavirus slowdown. Chinese industrial production rose 4.5% in May 2020 from a year ago, not too dissimilar to the 5% rise in May 2019. Retail sales were, however, down on that basis, down 2.8%. But that was a major improvement from the April drop of 7.5%. In February, the drop was 21%. A feature of the retail sales improvement was demand for major household appliances. Behind all this good activity is a rise in electricity production, up 4.3% year on year. That is quite different to the 8.2% drop reported for February. Even though most of this data is very positive, it isn't quite as positive as some analysts were expecting, and there is a tinge of disappointment in China itself. There is economic recovery, but it is proving harder than they'd hoped. It is a similar story in the US. The latest Fed factory survey, this time for the New York and Northeast region, the decline in May is far less than for April and less than was expected. Remember that this region was hard hit early and is at the forefront of reopening, and this survey is reporting some strong catch-up. But a virus resurgence there is threatening another lockdown. In Washington, a new US Fed corporate bond purchase program, one that will be extremely complex, has lit a fire under the equity market. Wall Street started the week sharply lower, but as the trading session developed, it turned higher on the Fed announcement and is now up 1.2% in mid-afternoon trade. That contrasts with the ASX yesterday that fell a sharp 2.2%, and they were followed by sharp falls in Shanghai, Hong Kong, and especially in Tokyo, which was down 3.5%. The US Treasury 10-year yield is unchanged from yesterday at 0.71%. The gold price is a little lower today, down $6 to $1,726 an ounce. And oil prices are firmer today, up nearly $1. They're now just under $37 a barrel in the US, and the Brent benchmark is on $40 a barrel. And the Kiwi dollar is slightly firmer again this morning at 64.7 US cents. On the cross rates, we're slightly softer at 93.7 Australian cents. However, against the euro, we're unchanged at 57.2 euro cents. That means our trade-weighted index is marginally higher at 69.4. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.